Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So what started off as a slow day going into the 10 o'clock number wound up being a fast day. A lot of guys who've been rolling up their shorts since last week, since last Thursday, when we, went back into a confirmed rally, had some big decisions to make today. And that's why you don't roll up your shorts. We talked about 139.36, which is that number. Since we're blue in the face, I think I had Vicky here during conversations with the Red Dog saying that was the line in the sand, that if you were short and you had short in the brain, you know what? You covered then. And then in the last day or so, we actually even really tested that level. So you had a way to say, you know what? We're digesting pretty well. Let me just cover here and be safe, because if you didn't do that, a lot of guys got squeezed real hard above that 140.80. If you look at the chart real quickly of the SPX, or actually I'll go to the spiders, I'll show you exactly what I'm talking about. First of all, this is the uptrend that's been intact starting from October. I'm just going to show you the tactical move right here, okay? It came in 2 Mondays ago, and we looked as if we were going to break this April 10th low. And you know what? We didn't. This was a reversal day versus area. That was your double bottom. That was a sign that says, you know what? If you were net short, I would cover some. And I came in net short that day, and I covered a majority of it. Okay, and then on this day, you said, oh, all right, we filled the gap. Bears don't really have the control that I thought they would have, so you probably should have covered more. And then on this day was when IBD put us back in a confirmed uptrend. Could have been a little quick, or it could have been, a little premature, but you know what? At least you knew what they were doing, and you really never want to go against what they're doing, because Willie O'Neill and the boys are some of the best technicians in the business. So P.S., if you didn't cover your shorts after this 3-day move, the time to cover was right here. Right when we got through this here. Oh, well, look at that, 139.36. If you covered there, you were able to switch some gears. Okay, if you covered there, you actually might have been able to short some, up here into the excitement or into the squeeze versus probably getting capitulated out. Because you had a nice move that wound up, coming off the highs the day after. We came back yesterday, retested here and held. So even if you didn't cover right here on this day, you had another chance to cover into this area, which previous resistance usually turns into support. And then if you didn't do so, I know a lot of guys, I watched the action very close, they covered as we traded through this 140.79 because they probably couldn't take it. We pushed all the way as high as 141.66, and if you were short from here or short from here and you were rolling it up, chances are you're like, oh my goodness, we're coming into these highs here. I just can't take it anymore, versus being able to maneuver a little bit better. As far as the close, not a great close. Traders like things to close in the highs. We still closed green. I would have liked to have seen a little bit more traction above this 140.79, but I still think we could be doing some sideways action here, and the market's actually acting pretty well. If you look at the diamonds, I personally like when the market's led by the Russell or led by tech, not particularly by the Dow, but the Dow somewhat pushed through the previous highs here. Yes, it didn't have crazy momentum and crazy upside action with volume, but pretty healthy, showing you that you can be long the market. There are stocks that are working, and you could have a plan here. If you look, last time we came down on that April 10th, we tested this area, but then just like I showed you how we did a double bottom in the spiders, here we did a higher low. So that gave you an indication that this is where some of the strength was, and that's why the diamonds made a new high well before the spiders, which actually came down to retest this area and not hold higher. So that's just some of the relative strength rules. So a lot of people have been talking to me, and they're asking me, to go over the Apple trade. What did you see? How did you know? How did you maneuver it so well? Obviously, yesterday I got hurt trying to buy Apple into that earnings gap. I had a notion in my head that earnings were great. We've just digested a decent amount of time. Let me try and buy some Apple, below 595, and yesterday it hurt. Okay, but I didn't get crushed. I wasn't crippled. My account didn't blow up because I wasn't buying a level versus a level. I mean, I was buying a level versus a level, not cost averaging it down. So I got a little chewed up. So today I came in and said, you know what? Today's another day. We're coming into the 50-day moving average. We have the pivot, which is the prior day low at 583 with the 50-day right underneath. So I was quickly armed with a plan, and it happened quick. And I know a lot of guys say, oh, it happened too quick for me. You know what? Apple does that. So you had to be really ready. So if you take a quick look at Apple, first things first, you go to the 5-minute chart, and you will see this is what took place, guys. Okay, it opened up. Okay, I actually traded some pre-market. Once it traded below yesterday's low, people are like, oh my goodness, this thing's gonna, get crushed. Let me get out of the way. And I said, guys, don't be shorted today down here because you're like playing with fire. And then meanwhile, it reversed. This was my first buy at 583. And then once it crossed above 584, you had a decent sell into this 591 area. Then it flagged again, showing you some commitment, holding above prior resistance, and then gave you another move. But here's what happened, guys. Here's when it changed. Okay, went as high as 596, and then it flagged again. Okay, so the high in Apple was put in right around 10:15. Okay, I got to show you the chart of the spiders. Go to the chart of the spiders on a 5-minute basis. Okay, when Apple made its high right around here, that's where the spiders were. So ever since that same little peak right there, okay, the spiders wound up having another additional move. And the spiders made a high at what time is that? That is at 11:50. At 11:50, the spiders were making highs. Let's see where Apple was at 11:50. Apple at 11:50 was well off the highs. This is 11 what? This is 11:45. This is probably 11:50-ish. So Apple not leading, off the highs, showing a negative divergence to the spiders, all of a sudden broke to the downside of the wedge. Okay, and that's when I actually tweeted and I said if Apple's any good, it should hold, 589 to 591, which was the prior flag. So that's why this level was valid first. Valid right here, right? They pushed it a little bit below, but it held, came back above, couldn't get back, above that little breakdown price, and then on this bar it engulfed it. On this bar I got stopped out and I got out of the way. And then all of a sudden this was Apple, all the way down into the close, which looked very, very negative. So it wound up being a really nice trade off the open, and then it changed its complexion as the spiders made new highs and Apple did not. So now if you go to the daily chart, you'll see that this still is actually getting a lot more troublesome right now. You have these lines in there just because I drew them from your intraday, but we closed in the lows. We closed near the 50. The 50-day moving average is now right around 581.55. Apple, if you come to me, had every reason to rally today, and it didn't. I don't know why it didn't. Basically, it could be forward-looking. It could be who knows. The bottom line is the stock told you something today where it told me I'm no longer going to be enamored with Apple. I'm going to be trading it both ways based on the price action. I actually didn't really want to be short Apple today because I thought it would be bounce day, but at least I made 90% of my money when it made sense, and then when it didn't make sense, I was like, let me just get out of the way, and I'm not going to get caught in a rug pull, which is what it wound up being. So now moving forward tomorrow, this is what you have to look at. Who knows? Maybe we see another 80-20 type trade. If you go back to the chart, you will see that here is the low. It's 581.23. This will be the new pivot. Maybe it wants to stop people out below the 50 and come back up. But chances are, on 1, 2, 3, 4 days, and it's definitely changing its character a little bit. I wouldn't be surprised if it fills this earnings gap all the way, and that would negate all the strength it had from that report. I think a lot of people were really battered and bruised and beat up during this decline because it was so harsh that people salvaged the trade into this up move into the resistance there. So now at this point, it's a very crowded long, so some guys might be selling into it. For me, I'm not going to look too far into it, except for I'm not going to just have an opinion with Apple, because I had an opinion yesterday that I was trying to find a pivot long into the earnings gap and it didn't work. That was an opinion. That's why I lost money, but at least I did it with a plan. Today, the pattern triggered and it showed a nice tradable composure or tradable composure until the divergence, and now my opinion has changed that Apple, to me, might not find an earnings pivot. It might fill the entire gap. Who knows? It might even break 555, so it's not going to be just on my radar. There are a lot of stocks moving, and a lot of stocks didn't close on their highs, but they look okay still. The ags look pretty good. If you look here at the Moo, you will see, I've gone over this a few times with Jill. She loves the ags, and it's looking pretty good. We talked about holding this 50 area. It closed green. It's above this high here. It's above the moving averages now. It has the highs up here, looking good. There are some stocks that look good within this group. You have AGU, which I actually entered a little bit today. If you look at the long-term pattern here, it's trading near this pivot high And you know, it actually, let's see what's going on here. I haven't really looked at this longer term pattern in a while. So here's I would say some kind of, yeah, here's a downtrend that it broke above and then retested and held, and now it's looking okay. As far as leadership, you know, it looks like it's got a nice leadership role. It couldn't break above this area yet and has earnings to come, but we shall see. This stock is acting decent. Okay, CF is my favorite. I'm not in it right now, but we talked about the breakout move, which thank goodness it gave us here. Remember this 189, I think I bought that and I sold above 195 or around there. It went as high as 199. And it's getting a little sloppy going into earnings because people are a little scared to take stocks into earnings because it's speculative, especially when you're up here. But PS, it broke above, it's holding above, showing some commitment. Thursday will be the earnings. On two other ones that act decent but are on the lower end of the range, you have Mosaic, which, you know, all in all looks okay. Here is that earnings gap. Here's actually, look, this is a pivot that I tried to find an Apple, couldn't find it. It traded below the low here of 52.44. On this day, came back above and started to go sideways. If Mosaic can get above this 53.74, it looks like it can continue. POT, pretty potent day today. I did enter it a little. I did enter a little bit of it today. It did close strong. Look at this nice move. It filled the gap, so it just negated the bearish action from earnings. So now it could continue. It's really in no man's land. If you want to have a swing long verse 42, that's cool. We'll see if the ags act better and this becomes a second half story. It could continue to the upside of this range here. If you want to look at Exxon, didn't close great, but either did the market. But overall, if you look at this macro pattern here, very strong. Okay, from the low of 82 all the way back to the highs, going sideways. Looks really good. If it could just stay above this, just say 86 for a little bit. Next time it tries to power through 87.50 to 88, you could see a really nice move to the upside. And if you take a bigger picture on this, a macro picture on this, I drew this morning, looks pretty good. You have a nice inverted, or inverse head and shoulders pattern where here's the left shoulder, here's the head, here's the right shoulder above this level, and it could be off to the races, which would also be healthy for the market. So, some time frames are lining up, and that's typically good. As far as, some of the banks, Bank of America, I bought some today below 830. It was acting okay until the market sold off, and it still acted okay. If you think about it, it's still up like 2% or so. I'm long some. If it starts to get above 840, I think it could, be an add to maybe 860, 870. Goldman Sachs really annoys the hell out of me. Every time it tries to break above a level, it doesn't really hold. I got out of it. I didn't stay with it. I bought some through this 115.55, hit a moving average, closed below the momentum level, which typically always happens with Goldman, which is why I think a lot of traders are just getting so fed up with this stock. If you look here, nice breakout to be negated the next day and then to continue. I remember even further back, I was trying to play it. Where was it? Where it just did the same thing a few different times here, and it's definitely just the stock doesn't trade great. What are you going to say? As far as came into the day with some nice expectations on the commodities. As soon as that 10 o'clock number came out and showed strength, I think people said, oh, maybe the Fed doesn't have to do QE or any more. So gold had a quick move down. Got me out of some of my size. I'm still staying with some to track it. It still looks okay. It's just, for some reason, it's not showing, it's not giving you any strength through this area. It's been a better sell than a long. It didn't fall apart like the last few times. If you look, last time I tried it, it closed in the lows and went lower, went to the bottom end of the range. Tried it this day, engulfed, came down. So it's still holding here. I would say if you want to have a stop, your stop should be 160 area, 160.31. Maybe it continues to hang up here because a lot of people got short today. And if it doesn't go any lower, we could get that trade. I wouldn't say game over here, but it's just a sloppy trade. Anytime I get into more than a tier 1 of the GLD, I just have a hard time holding it. So for me, I'm going to stay with tier 1 until I see real conviction, which I haven't seen there. And as far as some of the other stocks that people have been watching in retail, RTH, let's see how that looks. Still hanging out really well. If you remember this day, made new highs. Then it's been going sideways above it, so it's showing some health. Okay, so just the moral story is there are a lot of stocks that are acting well. And then you have some that are shortable. So you could trade both directions. You just don't want to be all in one direction and have an opinion. I know a lot of guys for the last week and a half have been just pounding the table short. Maybe they were caught from that double bottom. Maybe they were caught from last Wednesday, and I could just see how aggravated they are and how bitter they are. And that you don't want to be that as a trader. You want to be objective. You want to have a plan. You want to be versatile. You want to have tier sizes. You want to be able to tier in, tier out. Like even today, I pretty much closed in the highs of my day because I came in with 4 longs. If you're on my virtual trade floor, you saw I had like 4 longs and I was short the spiders. When Apple triggered for me and went through that 584, I covered my spiders and actually went long the spiders. And right there, I also put on Bank of America, I put on some Goldman, put on some XOM, I added to my Schlumberger. So I was in about 7-8 positions long. And then once we had that last squeeze above 140.80 to about 141.30, I said, okay, we just had a big move. We're now at 141.30. I covered my shorts around 140.70, got long around 140.80. So, in order to be smart and be a little bit protected, I'm going to keep my longs and I'm going to start I'm going to start cost averaging some shorts. So I started with a tier 1 short around 140.30 and we went to 140.56. I added, pulled back, took some off, and then at least I was protected. And then on that market pull-in, I didn't get hurt. It didn't matter because I had a good price there and I was able to manage my positions, sell some winners into strength, which I tweeted, sold some Goldman above 116, sold some some of that Schlumberger, at near the highs with XOM, so I had the luxury of buying some back or just staying with what I had because I funded it by shorting into the excitement instead of covering into the excitement. And that's the problem that a lot of people had, is that you could always take profits when we rally. You want to sell excitement. But if you're going to be covering into the excitement, chances are you did the wrong thing and you're going to kick yourself in the you-know-what afterwards. So at this point, we didn't close on the highs. There's still a lot of constructive looking charts out there. I think taking a portfolio approach with hedges is the way to go, and continue to use a tier system where you're in what you're in comfortably. And then once they trigger, you add, get the cash flow and run and keep measuring it along the way. This has been Scott Redler. Stephanie Link is coming tomorrow to the morning call. She's co-hosting Tune In. She's unbelievable. Excited to have her. She'll be here in the morning. I think we're going to do a really early morning call around 7 o'clock. See you then.